Investing in cryptocurrencies and stocks, an unmissable opportunity for the financial future. Have you ever imagined a world where your money works for you? Where instead of relying on a fixed salary, you can grow your capital in an intelligent and strategic way? If the answer is yes, then investing in cryptocurrencies and stocks may be exactly what you were looking for. In this video, we will explore the great advantages of investing in financial assets and how they can transform your financial life forever. The great growth opportunity. In recent years, the cryptocurrency market has gained notoriety. Coins such as Bitcoin, Ethereum, and other altcoins have shown impressive growth, attracting investors from all over the world. But we cannot forget about stocks, which have always been the basis of traditional investments and continue to be one of the most stable and secure ways to build wealth. 1. Explosive growth potential of cryptocurrencies. One of the greatest advantages of investing in cryptocurrencies is their potential for appreciation. Bitcoin, for example, has experienced meteoric growth, rising from a few cents in 2009 to surpassing $60,000 per unit in recent years. Ethereum and other cryptocurrencies have also followed this path of appreciation, providing significant gains for those who believed in their potential from the beginning. In addition, cryptocurrencies are still in a phase of adaptation and expansion. We are only beginning to see the real impact of blockchain and how it can revolutionize sectors such as finance, healthcare, entertainment, and even governance. By investing in crypto early, you can position yourself in a market that still has enormous growth potential. 2. Diversification and access to new markets. Investing in both cryptocurrencies and stocks offers valuable diversification for your investment portfolio. While stocks represent traditional companies with established business models, cryptos offer access to a new class of assets, often riskier but also with much higher returns. This diversification is essential to minimize risk. For example, when the stock market is down, cryptocurrencies can perform completely differently and vice versa. In other words, you're not putting all your eggs in one basket, which makes your investments safer in the long run. 3. Global access and ease of investment. One of the biggest barriers for many investors in the past was limited access to the financial markets. Fortunately, cryptocurrencies have changed that, allowing anyone anywhere in the world to invest with just a smartphone and an internet connection. With easy-to-access platforms like crypto exchanges, anyone can buy, sell, and trade cryptocurrencies without the need for traditional intermediaries like banks or brokerages. In the case of stocks, platforms like Robinhood, eToro, and others have made the process of buying and selling stocks much simpler and more accessible for the average investor. These apps offer reduced or even free fees, which makes investing in stocks accessible even for those with little initial capital. 4. Liquidity and flexibility. Liquidity is one of the main advantages of both cryptocurrencies and stocks. You can buy and sell assets quickly, which offers a level of flexibility that few other investments offer. If you need access to your money, you can simply sell your crypto or stocks on the market, often within minutes. While real estate or other types of investments can take weeks or even months to sell, crypto and stocks can be liquidated in near real time. This means you have complete control over your investments and can react quickly to market changes. 5. Access to new opportunities and innovation. When you invest in crypto, you're not just buying digital currencies, you're also taking part in a technological revolution. Blockchain technology, for example, promises to transform a wide range of industries, from financial services to supply chain, governance, and more. Investing in crypto is a way to position yourself at the forefront of this innovation, with the potential to be part of something truly disruptive. Similarly, investing in stocks isn't just about buying shares in companies. It's also an opportunity to become part of innovative companies that are shaping the future. Whether in technology, healthcare, renewable energy, or artificial intelligence, shares in leading companies offer the chance to participate in projects that have the power to change the world. 6. Potential yields and passive income. If you're looking for a way to earn high returns, both cryptocurrencies and stocks offer great potential. The stock market, especially so-called growth stocks or tech startups, can provide considerable returns over the long term. Some stocks can even pay dividends, providing a steady stream of passive income. Cryptocurrencies, while volatile, also offer unique opportunities. Some cryptos, like Ethereum, have features like smart contracts and DeFi, decentralized finance, which can generate additional income by allowing you to lend, borrow, or earn interest on your crypto. With staking, you can lock up your coins to earn passive income, almost like a bank deposit, but with much higher yields. 7. Future-proofing. The world is changing rapidly. The digitalization of the economy, the rise in popularity of cryptocurrencies, and the growing adoption of the stock market are shaping the future of wealth. Investing in cryptocurrencies and stocks now is a way to prepare for your financial future and not get left behind as the world moves forward. Younger generations, like yours, have a unique advantage. Growing up in a digital world with immediate access to information and resources to make informed financial decisions. By starting to invest early, you are not only building your financial independence, but also learning how to navigate a global market that will become increasingly relevant in the years to come. The time to invest is now. The opportunity to invest in cryptocurrencies and stocks is one of the greatest of our time. With growth potential, easy and global access, flexibility, and liquidity, these investment options offer young people the chance to build wealth, diversify their portfolios, and position themselves for the future. Now is the time to act. With one small step, you can start on the path to financial freedom. If you are ready to take advantage of the opportunities that the crypto and stock markets offer, get started today. The future is in your hands. Step-by-step guide to starting a profitable cryptocurrency and stock business. Starting a business in the financial world, whether it's cryptocurrencies or stocks, can seem intimidating at first. However, with proper planning, the right strategies, and a willingness to learn, you can turn these opportunities into a profitable business. Here's a detailed step-by-step guide to starting your own business, with practical tips on management and maximizing profitability. Step 1. Define your goal and niche. Before you take any steps, it's crucial to understand why you want to start this type of business. Ask yourself, are you looking to make money in the short or long term? Do you want to invest in stocks of established companies or in emerging cryptocurrencies, such as altcoins? Your answer will directly influence the decisions you make along the way. Tip: if you're looking for quick gains, you may be more interested in cryptocurrencies, which offer volatility that can generate quick returns, but also high risks. If you want to build a long-term investment portfolio, stocks from solid growth-oriented companies may be the way to go. Important: choosing a niche within this market. Technology stocks, sustainable companies, currencies like Bitcoin or Ethereum, for example, will help you define your strategy and increase your chances of success. Step 2. Study the market and understand the risks. Before investing any amount, it is vital that you understand the nuances of the financial market. Investing in stocks and cryptocurrencies requires a good knowledge base on how the markets work, how to read charts, understand financial news, and how external factors influence prices. Cryptocurrencies stay up to date with technological trends and innovations such as blockchain. Follow market news and analysis, as the crypto market is very volatile and can react quickly to political or technological changes. Stocks. Study economic fundamentals, such as companies' balance sheets and financial reports. Follow the stock market through platforms such as Bloomberg, Reuters, and specialized channels. Risks. The cryptocurrency market can be very volatile and unpredictable. The stock market tends to be more stable, but it is also subject to economic crises and crashes. It is important to have a long-term mindset and know when to diversify to protect your investments. Step 3. Create an investment plan and set an initial budget. After studying the market, it's time to create a plan. Define how much you are willing to invest initially and how you will distribute your portfolio between stocks and cryptocurrencies. Make sure you don't invest all of your capital at once and, most importantly, don't invest more than you can afford to lose. Asset allocation. Consider allocating part of your portfolio to safer stocks and part to cryptocurrencies, which can generate higher returns but are more risky. Diversification. Don't put all of your money in a single asset. Diversification helps reduce risk and maximize gains. Gradual investing. Start small and increase as you feel more comfortable and understand the markets better. Step 4. Choose investment tools and platforms. There are several platforms available to buy and sell cryptocurrencies and stocks today. Choosing the right tools to manage your investments is essential to ensure that your transactions are safe, fast, and efficient. For cryptocurrencies, use trusted platforms such as Binance, Coinbase, Kraken, or Gemini, which offer beginner-friendly interfaces and ensure the safety of your cryptos with cutting-edge security systems. For stocks, platforms such as Robinhood, eToro, TD Ameritrade, and XP. Investimentos are excellent options for those looking for an easy way to trade stocks. These platforms also offer educational resources and analysis to help you make informed decisions. Important: always check the transaction fees, security, and reliability of the platform before using it. Step 5. Monitor and adjust your portfolio. Investing is an ongoing process. Once you start, it is essential to regularly monitor your investments, understand what is happening in the market, and adjust your portfolio as needed. It's not just about buying and forgetting, but actively managing your assets. Cryptocurrencies. Given the highly volatile behavior of cryptocurrencies, it's important to keep up with global news, regulations, and technological changes that can affect prices. Stocks. Regularly check companies' quarterly results and earnings reports. If a company is underperforming or facing a crisis, it may be time to sell your shares and diversify. A good strategy is to review your portfolio every 3 months to ensure it is aligned with your goals and market conditions. Step 6. Management and profitability tips. Now that you have your foundation in place, it's time to apply management strategies and maximize the profitability of your investment business. 1. Risk management. To be successful, you need to understand the risks and know how to limit your losses. Use stop-loss orders to protect your investment if the price drops below a certain value, and diversify your portfolio to protect your capital. Also, don't invest all your money in a single asset. So learn from mistakes. Don't be afraid to make mistakes. The most important thing is to learn from them and adjust your strategy. Use each loss as a lesson to improve your next decision. 3. Stay up to date. The financial market is always changing. This includes the evolution of cryptocurrencies, fluctuations in the stock market, and new opportunities that arise every day. By staying up to date and well-informed, you can identify good investment opportunities. 4. Emotional control. The financial market can be unpredictable. and it can be easy to be tempted to make impulsive decisions. During times of high volatility, stay calm and focus on the long term. Step 7. Business expansion. Over time, once you have mastered the art of investing, you can expand your portfolio and even consider new business options, such as creating a financial education course, investment consulting, or even developing a cryptocurrency and stock analysis platform. Over time, you can even consider investing in technology, startups, or new blockchain projects to further diversify your income. Think of ways to monetize your knowledge. For example, write blogs, offer consulting services, or share your investment strategies on social media and platforms like YouTube. The path to success. Starting a business based on investing in cryptocurrencies and stocks is a process that requires patience, discipline, and a good understanding of the market. By following these steps and applying the management and profitability tips, you can transform your journey into a successful business. Don't forget, constant knowledge, careful management, and emotional control are essential to maximize profits and minimize risks. Now is the time to get started. The market is full of opportunities, and the right time to invest is now. How to control fear when buying and selling stocks and cryptocurrencies. An essential emotional skill for success. Investing in the financial market, whether in stocks or cryptocurrencies, involves inevitable risks. The fear of losing money is a common emotion, but to be a successful investor, it is essential to learn how to control this feeling. Fear can paralyze decision-making and lead to impulsive choices that harm investments. In this text, we will explore a powerful emotional skill that is essential for any investor: controlling fear. Fear is a natural response of the body to uncertainty, but when it comes to investments, it can be the biggest obstacle to success. Knowing how to manage this emotion can be the key to staying calm during the ups and downs of the market and ensuring that you make rational and strategic decisions. Let's learn how to cultivate this emotional skill and apply it in practice to control fear when buying and selling stocks and cryptocurrencies. 1. Understand fear and its causes. The first step to managing fear is understanding it. Fear in the financial market often arises due to uncertainty and volatility. When you buy and sell assets like stocks and cryptocurrencies, you are dealing with unpredictable external factors like economic news, market trends, and technological changes. This creates a feeling of vulnerability, which triggers fear. In addition, the fear of losing money or not making the right choice often arises due to the instinct for self-preservation. The human mind tends to focus more on losses than gains, which creates an aversion to risk. Practical tip: recognize that fear is a normal emotion and that all investors face this challenge. Instead of ignoring it or trying to fight it, accept it as part of the decision-making process. 2. Build confidence in your investment plan. One of the most effective ways to combat fear is to build confidence in the financial plan you have in place. Fear often arises when we are unsure of our choices. Having a well-defined investment plan can help reduce this uncertainty. Before buying or selling stocks and cryptocurrencies, create a solid strategy with clear goals and timelines. Ask yourself, why am I buying this asset? What is my long-term vision? When would be the ideal time to sell? Having clear answers to these questions helps eliminate the fear of the unknown and builds confidence in the process. Tip: always have an exit strategy. This means setting a sell price or profit target so you know exactly when to sell your assets, regardless of what the market is doing at the time. This prevents you from making hasty emotional decisions. 3. Use the positive visualization technique. A powerful technique for managing fear is positive visualization. Visualize yourself as a successful investor who makes decisions with confidence. Instead of imagining the worst-case scenario, losing money, imagine yourself achieving your financial goals. This helps rewire your mind to a more optimistic and resilient mindset. When you visualize success, your brain will begin to associate investing with positive outcomes. This can reduce fear, as you get used to seeing the potential for gains, instead of just worrying about losses. Tip: before making a decision to buy or sell, close your eyes for a few seconds and visualize yourself achieving your financial goals. Imagine the ideal scenario in which your decisions led to good results. This helps create a more positive and controlled emotional state. 4. Adopt a long-term mindset. One of the biggest sources of fear for investors is market volatility, especially in cryptocurrencies. When prices fluctuate dramatically, the fear of losing money can become paralyzing. However, those who adopt a long-term mindset have an easier time dealing with market swings. If you're focused on long-term growth and solid fundamentals, daily ups and downs won't have as much of a hold on your emotions. Investing with a long-term view allows you to ignore market noise, such as temporary price drops or sudden spikes. This creates a sense of emotional stability, as you know that success doesn't depend on short-term movements, but rather on broader trends and fundamentals. Practical tip: when investing, remember that the goal is sustainable growth over time. Resist the temptation to react to every market fluctuation and stay focused on your long-term goals. 5. Manage your expectations. Fear often arises when we have unrealistic expectations about the market. Many investors start out with big dreams of quick profits and end up frustrated when the market doesn't respond as they expected. This frustration breeds fear and can lead to hasty and ill-considered decisions. To combat this, it's important to manage your expectations and understand that markets are unpredictable. Not every trade will be profitable, and profits can take time to materialize. Instead of expecting quick results, focus on gradual and steady growth. Practical tip: set realistic expectations, taking into account the risks of the market and the natural cycles of ups and downs. By understanding that gains can be gradual and that losses are part of the process, you will reduce the fear of not achieving immediate results. 6. Develop the habit of reflecting before acting. An effective way to manage fear and avoid impulsive decisions is to develop the habit of reflecting before acting. When you feel fear, the urge may be to sell everything or buy in a hurry to avoid a bigger loss. However, hasty decisions are often driven by emotion rather than logic. Before making any decision, take a step back and reflect deeply. Ask yourself, why am I making this decision? Am I reacting to fear, or am I acting based on my planning and market analysis? Reflecting allows you to distinguish between emotional decisions and strategic decisions. Practical tip: when fear strikes, take a deep breath, give yourself time to think, and reevaluate your strategy. Remember that investing is a long-term process, and rash decisions can be more damaging than waiting and taking more informed action. 7. Practice self-awareness and self-discipline. Self-awareness and self-discipline are essential to managing fear. You need to understand your own emotions and how they affect your financial decisions. This involves being aware of when fear may become stronger and learning to recognize signs of panic or anxiety. Practical tip: whenever you notice that fear is influencing your decisions, take a break and analyze the situation objectively. Ask yourself if your decision is being driven by emotion or if it is aligned with your investment strategy. 8. Seek support and share your concerns. Investing can be a lonely experience, especially when markets are falling or there is uncertainty. However, seeking support from other investors can help reduce fear. Sharing concerns, strategies, and experiences can provide an outside perspective and help you make more informed decisions. A practical tip: join online investing communities. Seek out mentors or talk to friends who also invest. By sharing experiences, you can reduce feelings of insecurity and increase confidence in your decisions. Managing fear is the key to success. Managing fear is an essential skill for any investor. By understanding the causes of fear, building confidence in your planning, adopting a long-term mindset, and reflecting before acting, you can master this emotion and make more rational and strategic financial decisions. Remember, fear never completely disappears, but with practice and the right tools, you can effectively manage it and use it to your advantage. Be patient, be prepared for the ups and downs of the market, and never let fear take control. Now that you know a little more about the incredible world of cryptocurrencies, be sure to explore even more opportunities and tips to leverage your financial future. If you liked this content, subscribe to the channel, activate the bell, and don't miss the next videos that will help you understand how to invest intelligently and achieve your goals. Stay tuned for more insights and strategies on cryptos, business, and finance. See you in the next video. See you then.